You think you know the secret to making money in trading? Forget it. The truth is darker, weirder, and it almost destroyed Michael. Michael was a statistical marvel. He had a secret he couldn't tell anyone at his trading firm. While his colleagues struggled to crack a 60% win rate, Michael was consistently hitting a mind-boggling 95%. 95% win rate. That is nearly perfect. Every single morning, he checked his trading journal and saw row after row of vivid green winning trades stacked up like trophies. He walked around the office, nodding slowly, acting the part of the successful trader. But the thing nobody knew, the crushing, paralyzing secret, was that Michael was losing money. Not a little, he was losing a lot. Watching his entire account bleed out slowly, day after day. The math seemed impossible, like a financial black hole. How do you win 95 times out of 100 and still watch your account consistently go backwards? It makes zero sense. Michael felt the walls closing in. He was riding a roller coaster to bankruptcy with a 95% win rate. Desperate, he found himself outside the office of a psychologist named Dr. Van Tharp. Van Tharp wasn't like other trading coaches. He was the anti-guru. He didn't care about your moving averages or your Fibonacci ratios. He spent decades dissecting one question. Why do hyper-smart traders with great strategies still fail spectacularly? Michael walked into Dr. Van Tharp's therapy room with pride and shame wrestling in his gut. "Show me your last 100 trades," Van Tharp said, his voice calm and level. Michael pulled up the journal, laying it bare. 95 green trades and 5 red ones. He braced himself for the disbelieving gasp, the technical questions. But Tharp didn't even blink. He leaned forward and said, "Let me guess. You're losing money." Michael's jaw hit the floor. How could you possibly know that? Van Tharp just smiled. "Because I've seen this exact pattern 50 times before. You're not a successful trader, Michael. You're a perfectionist playing Russian roulette with a fully loaded gun." Michael felt something shatter inside him. His entire identity, the trophies, the 95%, was a lie. He didn't know it yet, but this moment of pure pain was his ticket to winning. If Michael's secret, that a 95% win rate can still mean bankruptcy, has you reeling, then buckle up. We are about to reveal the spreadsheet that exposed his fatal flaw and the brutal new rule he had to follow. This next part is the blueprint for turning your struggles into sustainable profit, but you need to focus. Now, let's get back to Dr. Van Tharp's office. And you won't believe the simple math that changed everything for Michael. The brutal truth of expected value. Van Tharp opened a simple spreadsheet. The numbers hit like a physical punch. The spreadsheet was Michael's performance laid bare. 95 winning trades. These tiny victories gave him an average gain of $47, and total profit was $4,465. 5 losing trades. Each one was a catastrophe, averaging a soul-crushing $1,200. Total loss, $6,000. The mathematical reality was inescapable. His net result was negative $1,535. "You see," Van Tharp explained, "you've been measuring success by how often you're right. The market doesn't care about your ego. The market only cares about one thing: expected value." In that moment, Michael realized his entire trading life was structured backward. Every small win felt like validation. He would watch a winner run for just 5 minutes, then smash the exit button to lock in that easy dopamine hit of being right. The certainty of a small profit felt better than the uncertainty of a massive potential gain. But those 5 losing trades? Oh, those were different. He would hold on to them for days, sometimes weeks, watching them bleed from 100 to 500, then finally to $1,200, because the fear of admitting he was wrong was so great it caused total paralysis. "Your ego," Van Tharp repeated, "is dictating your strategy. You are letting your losses run because your perfectionist ego refuses to admit defeat. You are cutting your winners short because your ego craves instant gratification. The core problem: ego-driven versus profit-driven trading. Michael's brilliance as an analyst was useless because his psychological attachment to being correct sabotaged every move. His entire identity was fused with this false image. I am the guy who is always right. And when that rigid identity was threatened by the reality of a losing trade, his entire decision-making system collapsed. He could not, under any circumstance, separate his self-worth from individual trade outcomes. This kept him locked in perpetual fear. There is also the problem of measuring success backward. He genuinely felt successful when he won 95% of his trades. This is the ultimate validation addiction, which is trading for an emotional payoff rather than for tangible financial results. The emotional high of being correct was more important for him than the balance sheet. Michael's premature exits directly stemmed from this emotional need. You have to wonder, why would someone lock in a miserable $47 profit and miss a $500 move? Well, it is because that $47 was guaranteed validation, and waiting for the big win meant being vulnerable to a pullback, which meant admitting he was wrong, and his ego absolutely refused to risk that pain. Cutting winners short and letting losers run is the ultimate symptom of an ego-driven, losing trader. And talking about winners, here's something pretty cool, especially if you'd love to win more from trading. Ultima Markets, the official exclusive partner of Inter Milan, have come up with something that makes trading feel like match day. Here's the play. When Inter wins, you win too, earning an extra 1.5% profit on your close trades that week. If Inter loses, Ultima Markets still covers you with a $50 trade loss voucher that you can claim right inside their app. When it's a draw, the scoreboard stays even. No extra rewards this round, but the season isn't over. The next match could change everything. And then there's the bonus. This November, mark your calendar for the days Inter Milan faces AC Milan and Pisa. Those are special bonus days you won't want to miss. Plus, if you sign up now, you'll get a 50% plus 20% deposit bonus to kickstart your trading. So, if you want to feel that match day adrenaline in your trading week, check out Ultima Markets using the links in the description or the pinned comment below. Now, let's get back to the video. The solution: playing the backward mission. Van Tharp gave Michael a revolutionary backward mission. I want you to try to lose money on 60% of your trades. This wasn't about being wrong on purpose. No, it was about creating a system where the cost of being wrong is small and guaranteed, and the reward for being right is huge and guaranteed to run. Michael's new rock-solid, unbreakable rule was: risk $100 to make $300 minimum, a 1-to-3 risk-reward ratio. This simple rule is mathematically brutal, but psychologically liberating. And it's the math of the profit-driven trader. Let me break it down. Win 40 times at $300 each equals $12,000 total profit. Lose 60 times at $100 each equals $6,000 total loss. Net result equals $6,000 profit with a seemingly terrible 40% win rate. And for Michael, for the first few weeks, it was hell. Every day, he wanted to quit. Cutting a loss fast at $100 felt like the ultimate form of giving up. Watching a winner pull back from $250 to $180 before hitting $400 felt like torture, because his old identity, the guy who's right 95% of the time, was dying, and the ego screamed in pain. But then, the unbelievable happened. Around week 6, something in Michael cracked. He stopped caring about being right. He would take a trade, set his $100 stop loss, and set his $300 target, and literally walk away. If it stopped out, he would shrug and say out loud, "The market disagreed with me." Next, if it hit his target, he would calmly move his stop and let the profits run free. And the result was, his win rate dropped to a profitable 43%. His account grew by $8,400 in the first month, and he finally became the profitable trader he was meant to be. Michael didn't just change his strategy, he rewired his brain, and here's the thing. You can steal his exact blueprint. These 5 pillars will fundamentally reprogram how your mind processes winning and losing. This isn't about motivation or positive affirmations. This is about hijacking your subconscious so it craves profits instead of validation. Number 1. Redefine success from win rate to expectancy. Your mantra must become, "Success equals following my risk to reward rules." You should never, ever mistake your win percentage for your financial outcome. Accept that you can, and probably will lose more often than you win, and still be wildly profitable. Mindset shift. Focus your entire attention on the quality of your decision-making, not the unpredictable outcome of individual trades. Action step. You must calculate your true expected value, or expectancy. It is the only true measure of your strategy's power. Then, religiously celebrate executing your system perfectly, even on losing trades. 2. Embrace losses as business expenses. A loss is not a failure. It is simply the cost of acquiring information that the market disagreed with you. This is the tuition you pay to stay in the game and find the next big winner. Mindset shift. Losses are not a personal attack. They are simply business expenses. Cut every loss instantly and mechanically, just like Michael's $100 rule. Detach your ego from being wrong. The market doesn't care. It simply moved on. Action step. Set hard stop losses before entering any trade. Track and grade yourself rigorously on how flawlessly you obey your stop loss, regardless of the outcome. Number 3. Let winners run. Kill the need for instant validation. You must learn to delay your gratification. Comfort with uncertainty is infinitely more valuable than quick certainty. Your biggest enemy now is the impulse to cash out when you see a profit. Mindset shift. Trust your established exit strategy instead of your lizard brain. Stay in winning positions even if they pull back temporarily. Those pullbacks are simply the market shaking out the fearful traders. Action step. Always aim for a minimum 1 to 3 risk-to-reward ratio. You can also use trailing stops to manage your trade and allow time for profits to truly develop. Number 4. Separate identity from outcomes. You must deliberately shed your old, fragile identity and build a new, strong one. Your new identity is, "I am a disciplined risk manager." You are defined by your consistent process, not by a transient result. Mindset shift. Your value as a trader comes from consistency, not perfection. Judge yourself only on your process and your discipline. Action step. Start a trading psychology journal. After every trade, rate yourself 1 to 10, only on how well you followed your rules. Celebrate discipline, especially on losing days. 5. Play the probabilities, not the perfectionism. Trading is a numbers game that plays out over many trials. You are managing probabilities, not predicting perfection. Mindset shift. Accept that perfect decisions can still result in losses. Your focus is on the statistical edge over time, across the next 100 trades, not the outcome of the next single trade. Action step. Never let one loss or one big win emotionally influence the execution of the very next trade. Review your performance monthly, not daily. Back to the Michael story. 6 months after that devastating day, Michael returned to Van Tharp's office. His win rate which once stood at a proud 95%, had now stabilized at a profitable 38%, and his account was up 47% for the entire year. Michael finally understood the great paradox. "I thought trading was about being right," Michael said. "But it's not. It's about being wrong small and right big." Van Tharp smiled, pulling up the quote that explains this game better than any indicator. "Win or lose, everybody gets what they want out of the market. Some people seem to like to lose, so they win by losing money." Ed Seikoda, "You were winning what you wanted, Michael," Van Tharp concluded. "The feeling of being right. Now, you are getting what you need: consistent profits." The market doesn't give you a trophy for being right. It only pays you for managing risk. If Michael's impossible story just flipped a switch in your brain, then you know exactly what you need to do next. Here is what happens next if you are smart. Watch the recommended video. It talks why you keep missing winning trades. And also, it exposes another psychological trap that's draining your account right now. You can also join our Telegram channel. That is where the real daily work happens. Like this video and also subscribe so the algorithm keeps feeding you what you actually need instead of what feels good. Most traders ignore this advice and stay broke. Please, don't be like most traders.